Assalamualaikum and hi everyone. For today's presentation, me and all my group members are going to present about cost push inflation for chapter 6. Our group members are me, Ilhan Farique, NOOR AQMAL, HARITH ZAKUAN, YUSFADLY AMIN, SYAFIQAH SYAMIMI, and also NURUL AFIFAH. In this video presentation, we are going to present to you guys about first, introduction, second, analyzing current macroeconomics problem, third is appropriate measures to overcome macroeconomics problem, and lastly is the conclusion. Right now, I am going to present to you guys about the introduction for this video presentation. Inflation is defined as a sustained increase in the aggregate or average price level of goods and services in an economy. When the inflation is high, the value of money will be lower, and vice versa, which is when inflation is low, the value of money will be higher. When inflation happens, the value of a currency is lost because the consumer's money will no longer buy as much today as yesterday. Inflation is measured using data from the Consumer Price Index (CPI) over a period of months or even years. An increase in this cost is called inflation, and a decrease in this cost is called deflation. Cost push inflation. A decrease in aggregate supply can also increase inflation. This is known as cost push inflation. Cost push inflation occurs when a shortage of labor, raw material, poor harvest, or capital raises production costs and lowers total supply, thereby raising the price level. Total demand remains the same, but since there are fewer goods or services, the supply can ask for more for each unit. Price increases before full employment are reached cause a supply inflation shock. This is because increases in production costs are passed on to consumers in the form of higher prices. Cost push inflation can only occur when demand for the end product or service, such as gasoline, is inelastic because people cannot find other substitute to replace it. When demand is elastic, people buy less of the product or switch to cheaper goods.
Okay, next, we are gonna talk about analyzing current macroeconomic problems. Okay, according to the article, the low base effect from the previous year is the key reason why the Consumer Price Index (CPI) increased more in April 2018 than in previous year. According to the data, the transport index has climbed by 27%, implying that the price of gasoline as RON 95, RON 97, and diesel will continue to rise until the first quarter of 2022. This will result in higher inflation and slower economic growth because of the rising cost of raw materials. Public transportation such as taxis and bus will charge the customer more costs. Then there is the inflation that occurs when housing, power, water, and gasoline price rise over the previous year. This is due to the end of Tenaga Nasional Berhad TNB Power Discount Program for domestic customers under the Prihatin Rakyat Ekonomi Stimulus Package Prihatin. Many individuals were laid off and became unemployed during the MCO, mean movement control order period. Therefore, the government kicked this scheme to help them. However, after the situation was under control, the government ended this assistance in order to recover the country's economy. This discount assists people in addressing COVID-19's impact, stimulating people-centered growth, and promoting quality investment.
For the third point is, even though the index is rising rapidly in April 2021, it remains under control because it is one of the processes used to salvage the country's economy. Terengganu, Kelantan, Kedah, Perlis, Pahang, Johor and Negeri Sembilan are the 7 states that have rates higher than the national CPI. Rate of 4.7%. The index for food and non-alcoholic drinks increase in all states. When food wages rise, the price of food rises along with them. Food has always been subject to inflation. That is because they can't last very long, and it was during the MCO period. When food begins to decay, the machine must incur significant losses due to a lack of consumers, As a result, the solution is for merchants to increase the price of food in order to recoup the advantage. For the last point is due to a supply deficit, higher demand and weather unpredictability, the food and non-alcoholic beverage index jumped 1.9% from a year ago. Despite the fact that the overall index rose in April 2021, Muhammad Hussein claimed that the core index, which eliminates the most volatile item of fresh food as well as administered pricing of goods and services, rose 0.7%.
Okay, next we go through to the discussion to overcome macroeconomics problem. Based on statistic given, in April, consumer prices increased by a seasonally adjusted 0.16% over the previous month, falling short of the 0.33% increase seen in March. The increase in prices in April was the smallest since November 2020. Looking at the specific of the release, the weaker rise in April was mostly due to decreased transportation price pressures, which more than offset rising food and non-alcoholic beverage expenses. Inflation jumped to 4.7% in April, up from 1.7% in March. The rate of inflation in April was the highest since March 2017. In April, the annual average variation of consumer prices was minus 0.6%, up from minus 1.2% in March. Okay. This is what Julia Goh and Look Siu Ting, which is economists at UOB, commented on the inflation outlook and its implications for the monetary policy. Okay, and the ANZ economists, Dheeraj Nim and Sanjay Madar, agree with their commented. Julia Goh and Look Siu Ting said, from June onwards, headline inflation is expected to reverse trend and fall below 4.0%. Rising pandemic risk and a tight labor market will continue to dampen supply-side inflationary pressures, keeping overall inflation in check. Okay. We expect Bank Negara Malaysia, which is BNM, to keep rates constant for the rest of the year, notwithstanding its unaltered forecast for strong GDP growth of 6.0% to 7.5% in 2020, which is despite a countrywide MCO of 3.0 and a temporary price hike. Okay, what the ANZ economists, which is Dheeraj Nim and Sanjay Madar, agree is, they said, since the increase in inflation is mostly driven by a low base, it is a non-issue for monetary policy. Furthermore, further relaxation of the policy rate may not provide any significant benefit. As a result, we expect Bank Negara Malaysia to remain on hold this year while maintaining an accommodative stance to the economic drift. Okay, next we go through to the next. Inflation is expected to average 2.20% in 2020, up 0.1 percentage points from last month's projection, and 1.9% in 2022 according to the Focus Economics Consensus Focus Panel. Malaysians, on the other hand, are concerned about general price levels, notably the prices of fresh foods, particularly fish. This is understandable, especially for low-income families that spend a big portion of their daily money on food. However, inflation and cost of living are not the same thing. While inflation is the rate of change in overall prices, cost of living refers to the absolute prices of products and services consumed on a daily basis. Despite high cost products and services, we can have low inflation rates. Malaysia has traditionally dealt with inflation by employing economic instruments to alter aggregate demand, such as monetary policy. To the degree that inflation is influenced by increased import costs, the strengthening of the ringgit should help to reduce inflationary pressures. Malaysia also employs supply-side policies to keep prices under control, such as imports, liberalization, and domestic production. The latter in the form of the Green Book program, which encourages individuals to grow vegetables in their backyards. Okay, next we take a look about Malaysia is also known for employing the Price Control Act to implement administrative action in the form of price limits on basic products and services, notably during festival seasons. This instrument is maybe unique to this country. Some of these steps can be implemented right away, depending on their applicability in the current situation. This will be evaluated by the agencies and authorities. Okay, while we wait for the high-level committee's research and recommendations, it could be good to look at the inflationary risk from two angles. Uninformed and disorganized consumers are particularly exposed to unfair trade practices.
So the content of the discussion to overcome macroeconomics problem is consumerism and its relation to inflation, policies to reduce money supply, and lastly the impact of monetary policy on financial condition or fiscal policy. The first way to overcome the inflation problem is the consumerism and its relation to inflation. The consumer sovereignty is emphasized in economic textbooks. This isn't always the case because they lack access to information on price fixing and supply manipulation. Many customers are readily manipulated by suppliers and merchants. Uninformed and disorganized consumers are particularly exposed to unfair trade practice. And the second way is the policies to reduce money supply. Increasing the interest rate on government bonds, this method works by encouraging more investors to buy these bonds, which will reduce the amount of money flowing into the system. Anyway, as the consumers lack access to information on price fixing and supply manipulation, many consumers are easily exploited by suppliers and merchants. Uninformed and undisciplined consumers could be exposed to unscrupulous commercial practice. So basically, the impact of monetary policy on financial condition require a balance between the need to support the economy, maintain a low inflation rate, and avoid creating incentive for excessive financial risk-taking. The outcome has been a monetary policy has avoided negative real interest rates for sustained periods, although temporary negative real interest rates were tolerated when the inflation rate increased due to the transitory effect of various shocks. So the low interest rates can create various financial imbalance, particularly in a high saving society like Malaysia, when it comes to economy. More than just low interest rates, an economy needs supportive credit conditions and a prudent credit culture to grow in a healthy, sustainable manner. So the aversion to long periods of negative interest rates combined with other policy tools such as micro and macro prudential measures are in the monetary policy committee's view the best way to ensure that monetary policy supports both macroeconomics and financial stability. The last method that can use is the fiscal policy. Since monetary policy is ineffective in addressing the issue of growing using costs, other strategies such as fiscal policy must be used. So in the short term, the Malaysian government has made steps to ensure that basic commodities and services are available at a lower cost. Attractive prices attempts to ensure that adequate supply of basic items, and to combat profiteering, the government mandated that enterprises monitor price increase. So food for a variety of reasons. Inflation deserves special attention. Is the largest at the moment. CPI component 30.3% is directly affected by price reforms and plays a role in inflation. Inflation expectations among households are heavily influenced by the economy. And lastly, the central bank must comprehend that the situation from the perspective of consumers and companies, so the central bank runs the risk of speaking in a language that its constituents do not understand. So the Central Bank of Malaysia has attempted to obtaining monthly household data with focus group 2 and influencing one's behavior. The exchange rate is an important factor because of the open structure of the Malaysian economy. Increased exchange rate volatility has been a major factor in public perceptions of inflation and company pricing.
Conclusion: when enterprises are already operating at full capacity, increases in the cost of any of the four components of production, namely labor, capital, land, or entrepreneurship, have pushed up prices. When expenses are greater and productivity is maximum, companies cannot retain profit margins by producing the same number of goods and services. The food and non-alcoholic beverage index climbed because of a supply constraint, increasing demand, and weather uncertainty. This is due to a scarcity of raw resources. a rise in labor costs to create new raw materials, or an increase in the cost of importing raw materials. To offset increasing fuel and energy expenses, the government may raise taxes, compelling business to devote more resources to paying taxes. To compensate, the cost increase are passed on to consumers, resulting in an increase in the overall price level of inflation. For cost push inflation to occur, demand for goods must be static. That means demand must remain constant while the supply of goods and services decrease. Government must use multifunctional techniques such as enhancing tax and revenue structures, increasing fiscal and monetary disciplines, eliminating supply side disruptions, eradicating anti-competitive market activities, and limiting black marketing.